part is live. We got that, and we're recording on this. And it is May 17th, 2023. I'm glad to be here again with Bob Tassone with Port Insurance and Port Financial here in Williamsburg. And I'm John Polson with the Memory Group Real Estate here in Williamsburg as well. We're with eXp Realty. And Bob, I really appreciate you taking this time again this morning. We are here to introduce to the world what kind of services you offer, and you've been offering these services for a long time, so this isn't your first introduction by any stretch, but I like that we can share more information with the public out here about particularly in the greater Williamsburg Peninsula area. And you and I both kind of serve a pretty broad range, so we're not just limited to Williamsburg, but talking about service areas outside of that, of course. But the point is that you offer a lot of financial and insurance information that is good for homeowners to be aware of. And today, I think you have some subject that you would love to share, that I would love for you to share for homeowners out there so that they can learn a little bit more about what their coverages are. How's that sound?
That's great.
All right. Well, we're here obviously to share information, to educate our public and help them make smart decisions about real estate and insurance and financial choices. And so with no further ado, tell me a little bit more about coverages that homeowners should be aware of and that kind of thing.
The first thing to understand when you buy a homeowner's insurance policy is that you're insuring your home, but you're also insuring yourself. Because there's a liability coverage in the homeowner policy, and that is the basic liability policy that you have for the things that you do as an individual person. And so it covers you while you're at home on your property, but it also covers you if you are involved in some type of liability incident outside of your home.
Yeah.
So that's why as an individual, when you apply for homeowners insurance, the rate for it can be affected by your credit.
Okay.
And so when someone applies for homeowners insurance, they do a soft check of their credit. It's not a hard check. It's not the type of check that would reduce your credit score because you're applying for credit. You're not applying for credit. You're just applying for an insurance policy. And so it's a soft check, but the premium can really vary depending on that person's credit. And so sometimes I'll get a request for a quote, and I have to kind of tiptoe around it because I don't know what the person's credit standing is, and I have to make some assumptions.
Yeah, sure.
But the only way to get a verifiable quote is for you to provide your social security number and your date of birth so that I can actually check. And I don't see your credit score when I do that, but I can get an idea if your credit is good or if it's not so good by the rate.
Yeah. Okay. You're easily able to see those comparisons.
And so I can see a homeowner premium is $1,500, and I did one like this yesterday. It was $1,200. Maybe the credit's not so good.
Okay.
Or vice versa.
Okay.
But anyway, so anyway, the coverages that are in the policy, we talked about liability. The main coverage that most people are concerned about is for the dwelling or for the home itself, and that is an amount that the insurance company will name on the policy. Now, sometimes it seems like that number is really large because you just bought this house for $300,000, and I have a replacement cost on it of $350,000. Why is it that my number is bigger than your number? Well, the reason for that is because we've got to rebuild it from scratch. We've got to have enough money to do that. We've got to clear away whatever is left of the building that was damaged, if it was damaged by a storm or by a fire. And we've got to get all the plans, we've got to get all the approvals, all the permits, and then we've got to build it.
Yeah.
And to rebuild it the same way as it was, it's just not as simple as it sounds. So that's why the reconstruction cost is often higher than the amount that you paid for the building itself. And then if there's an event like a storm, let's say we have a Hurricane Isabel come through, and there's lots of places that are damaged, not just your house, but
Right.
places all over the area that are damaged. The first thing that happens is the price of building materials goes up,
Oh,
up,
yeah.
up. And the price of labor goes up, up, up. So if you want to get your house rebuilt, maybe that 350,000 won't do it. That's why we have something called extended replacement costs, which will allow us to have an additional amount of coverage in the event of a calamity where the cost of everything is greater than it would have been if it just was a single incident with your house.
Right.
So that's the first coverage is the dwelling or the building itself. The next coverage is separate structures like garages and sheds and gazebos and those things. Those are covered separately. They're usually covered for 10% of the amount that's on the dwelling. So if the dwelling was covered for 300,000, the garage would be covered for 30,000. That's a standard amount of coverage. If you've got a real fancy garage, we might need to raise that. But most of the time it works that way.
So you're able to look at a property and look at what a consumer needs, what a homeowner needs for their specific property and make those adjustments in some way, right?
Yeah, the first thing I do nowadays when someone wants a quote is I'll go online and I'll type the address in. And you know, there are these websites that come up that show all kinds of details about your house. Most of the time they have pictures.
Yep.
So I get a good idea what the house looks like. Usually there's more pictures of the inside than the outside, and I'm really concerned about the outside more than the inside. But anyway, I get a good idea. And I also go to the county website. I look at see what that tells me, and then most of the raters that I use are tied into those systems anyway. So a lot of that information will pre-populate, but I like
comes out, yeah, like draws that information. Yeah.
But I like to take a look at it before I start to see if there's anything unusual or anything that I should be looking for. And sometimes there are things that are not shown on there. So we have more questions than we have answers, but we do the best that we can with the information that we have.
Absolutely. Right. So at the core of really what you're doing with this information is finding, well, you're doing a fact finding, setup, but what you're offering really is peace of mind to that homeowner, to that individual, so that they know that when their insurance comes into play, if it ever does, that they're covered, right? I mean, your goal is to make sure that they have that peace of mind to know that they're going to be made whole if something happens and not be homeless.
Yeah, because when I talk to somebody and I have them sitting at a conference table or a kitchen table or a desk, wherever we are, I have to think about that person that's sitting there with me, but I also have to think about that person that their house just burned down, or their house was divided in two by a big pine tree, or some other situation. I have to think about a lot of different people, not just the person that's sitting there with me.
Yeah.
But unfortunately, most of the time, I also have to think about the bank that they're working with, because they're the ones that are telling them they have to have this insurance.
Right. Mortgages pretty much require it.
And so I have to set up in a way that the bank is happy as well.
Yeah. Yeah. Everybody should have it. There's no question that if you don't have a mortgage, you still need to have homeowners insurance, but a mortgage, most banks will require that you have homeowners insurance while you have that mortgage on the property. As far as the bank is concerned, once you have no mortgage, if you don't want insurance on your property, that's up to you as far as the bank is concerned.
Yeah, there are houses out there that don't have it.
Yeah, and it's called self-insured. Some people do self-insure, and for some people that's fine.
Anyway,
But
so
people, it's
just
not
quickly
practical.
to finish because I know time is of the essence. But so let's say your house is destroyed or partially damaged or whatever, but you can't live in it.
Yeah.
You need to go someplace else while they're fixing it. That's called loss of use coverage.
Oh, wow. Okay. Good to know.
Okay. And that puts you in a Motel 6 or hopefully someplace better while they're fixing your house. And that's a percentage of the dwelling amount. Personal property is covered. So if you want to know what personal property is, you just imagine King Kong picks up your house, he shakes it. Everything that falls out is personal property. So the chandelier in the dining room is not personal property because it didn't fall out, it's attached. But the washer and dryer, the stove, all of that stuff fell out when he shook it. So that's all personal property. And so that's usually probably half of the dwelling value. And you can have it for more depending on what kind of things that you keep in your house.
Yeah.
Yeah, but the standard coverage is about half. And then we talked about the liability coverage. And I'll do a whole nother class on liability, but anyway, that's in there. And there's something called medical payments, and this is on your car insurance and on your home insurance. So the kids are playing in the backyard, somebody falls off the swing, they need to go to the emergency room. That is no questions asked coverage for them to go, because what that's designed to do is to mitigate the damage or the injury. So if you have a situation happen in your backyard, encourage that person to go to the emergency room, get it taken care of. You don't want a small thing to become a big thing. That's why there's medical payments coverage. And then very, very quickly, you can have coverage for things like water and sewer backup, power lines that go into your house, earthquakes, floods. Some of these are separate. Some of them can be added on. You can have coverages for artwork or jewelry or firearms. That's all additional things that can be added to the policy if you have special things that need to be added.
Very cool. There's a lot. So insurance, just the number of things that you've identified, Bob, is an important part of any homeowner's insurance policy, with other things additional to some insurance policies. And it sounds like we could go on and on about a lot of those subjects. I look forward to being able to have you share more information about those subjects. And for anybody that does need insurance, you're the guy here in Williamsburg. I certainly would recommend you, and anybody that wants to contact you, your contact information will be in the description on this video. And so Bob Tassone with Port Insurance and Port Financial Services here in Williamsburg. Bob, is there an office where people can actually come visit you?
My office is in Williamsburg Office Park, which is over kind of behind the Carrot Tree Restaurant on Jamestown Road. And there's a way to set appointments if you'd like to come into the office, or I do a lot of things like this nowadays.
Yep.
And or we do things over the phone. However we need to do it. And if I insure your house, I'm going to come out and take pictures of it. So definitely going to know what it looks like. And if there's ever a claim, I'll have pictures, where I can say it needs to be fixed, so it looks like this.
Right on. Well, Bob, thank you again. This is great to be able to offer the community this information so that we can help them understand what services you offer and the important things that any homeowner should be considering with their premium and their insurance policy. It's not all just about the premium.
Not all about the premium. Got to have the right. That's right. Exactly.
Yeah. I mean, sometimes you can get what you pay for. Cheap is not always better. But
if somebody calls me and says, "Is this covered?" I want to say yes. And sometimes I have to think about things that you didn't think about.
Yeah, that's very important. So that is good that you were able to be involved to help get to know those people that you're covering as well. So Thank you very much for that, because that is important to all of our homeowners as well. And with no further ado, we'll let you get on about your days, and we'll have some more of these calls coming up on Wednesdays around 10:30. Looks like our time to be on here, and I look forward to more of these discussions. Bob, thank you very much.
Thanks, John. Great to work with you. Take
All
care.
right, have a great day. Bye.
Okay.